For those closely monitoring the Iraqi dinar, this transition from discussion to tangible infrastructure building represents a potential turning point. To fully grasp the magnitude of this alleged move, we must understand what a comprehensive currency transformation truly involves. It is far from an instantaneous event. Instead, it is a demanding, multi-stage process requiring synchronized efforts across various financial dimensions. Key steps include the intricate recalibration of the exchange rate mechanism itself, substantial upgrades to domestic banking protocols to align with global standards, and the careful facilitation of international convertibility to ensure smooth cross-border transactions. Furthermore, it demands the creation of robust liquidity reservoirs and a meticulous harmonization of compliance and anti-money laundering (AML) protocols with rigorous global financial regulations. The entry of a major international player like JP Morgan into this process suggests that the development of the system is being anchored in solid, globally recognized best practices, ensuring that the necessary components are assembled with expertise and regulatory foresight, potentially paving a clearer road for the dinar's stronger international acceptance. The implications for the Iraqi dinar and its current holders, if this institutional alignment proceeds, are significant and multifaceted. The first immediate benefit would be a marked enhancement in liquidity across global markets. Should established international banking networks begin to routinely process dinar transactions, handling conversions, exchanges, and cross-border transfers, the financial friction currently associated with the currency would be substantially reduced. The second critical impact is the powerful boost to the currency's overall legitimacy. A top-tier international bank's active participation sends an unequivocal message to other financial institutions, major governments, and large-scale institutional investors. The dinar is no longer a marginal asset but a currency integrated into a globally monitored and increasingly regulated financial structure. The third potential consequence relates directly to market psychology and momentum. As liquidity and legitimacy converge through confirmed institutional involvement, the psychological perception of the dinar can shift dramatically. Increased institutional confidence often leads to rising demand from a broader spectrum of investors, transitioning the view of the currency from a purely speculative venture to a potentially strategic, long-term asset. However, it is fundamentally crucial to maintain a grounded perspective. No outcome is finalized or guaranteed until formal official pronouncements are made by key authoritative bodies, such as the Iraqi monetary authorities, JP Morgan itself, or major global financial networks. The existence of preparation signals a possibility, not a certainty of a reset, as all markets remain vulnerable to geopolitical events, unforeseen regulatory hurdles, and shifts in the global economic climate, any of which could impede even the most carefully constructed plans. Focusing on the current timing, a key question remains: why might 2025 represent a plausible window for such serious institutional interest? Over recent years, Iraq has demonstrated a gradual but persistent trend toward greater economic stabilization. Despite the persistent inherent volatility in oil revenues, these earnings have been essential in rebuilding the country's fiscal stability. Concurrently, there have been concrete efforts to modernize and professionalize the domestic banking infrastructure, strengthen the regulatory frameworks, and significantly enhance the oversight mechanisms governing financial flows. These cumulative reforms are precisely the prerequisites necessary to foster and support meaningful participation from major international banks. This domestic progress, combined with a broader global financial climate that is constantly searching for fresh, emerging market opportunities, may have created a unique window of opportunity that attracted the involvement of key global players. JP Morgan's apparent interest could therefore be interpreted as a powerful institutional validation that Iraq has successfully navigated its way into this crucial window. A deeper understanding of this development must also incorporate the evolving global perception and prevailing political climate. Global powers and large financial players use rigorous risk assessment models before committing to a market. When major institutions consider deep exposure to a national currency system, their participation suggests a significant improvement in their internal assessment of political, economic, and institutional stability within the country. While it would be unrealistic to assume that all political risks have evaporated, JP Morgan's alleged involvement strongly hints that the balance of factors, the assessment of potential reward against manageable risk, may have decisively shifted in Iraq's favor. This shift in professional risk calculation is a tangible indicator of progress, far more persuasive than anecdotal optimism. From the viewpoint of the dedicated dinar holding community, this institutional engagement could have a massive psychological impact. For a community that has endured years of waiting, often grappling with frustration, skepticism, and the risk of scams or misleading information, the involvement of a major globally recognized bank offers a potential renewal of confidence. It injects a new, more serious energy into the community's discussions, potentially moving the abstract concept of a currency change from a hopeful someday to a more tangible potential reality soon. This renewed belief can influence the behavior of long-term holders, encouraging greater patience, more strategic planning, and a more careful monitoring of official global financial movements, rather than reacting solely to volatile local rumors. The potential for increased credibility might also foster a shift in strategic planning among holders. Rather than focusing purely on short-term speculative movements, some individuals might begin to consider a longer-term strategy that incorporates savings, a calculated approach to conversion timing, and perhaps a degree of portfolio diversification. This more measured, hopeful approach is essential, retaining sufficient holdings to benefit should a transformation occur, while ensuring that one's financial safety is not jeopardized by an overly concentrated and singular bet. Cautious optimism, guided by evidence, often yields a more sustainable strategy than blind faith fueled by hype, and the nature of this institutional interest encourages a more sober assessment. Amidst the growing interest, it is vital to acknowledge and heed the voices urging caution. Currency transformations are inherently delicate and highly complicated endeavors, perpetually susceptible to a myriad of unpredictable external forces. These forces include persistent geopolitical turbulence, rapid fluctuations in global oil prices, and sudden shifts in international banking regulations. Even when initial phases appear promising and proceed smoothly, delays are common and partnerships sometimes falter under pressure. External factors, such as international sanctions, intense regulatory scrutiny, or a major economic crisis elsewhere in the world, have historically proven capable of derailing even the most thoroughly conceived monetary reform plans. It is necessary to remember that for every successful reform story, there are cautionary tales where initial optimism dissolved under the weight of harsh economic realities and unforeseen obstacles. For those holding dinar, this particular moment, marked by the signal of institutional interest, should serve as an impetus to meticulously reevaluate one's personal strategy. This reevaluation should not be driven by panic or a sudden urge to abandon holdings, but by a renewed commitment to staying intensely informed. The focus must be on monitoring credible mainstream financial news sources and actively watching for formal, verifiable statements issued by global institutions, major banks, or Iraqi monetary authorities. It is paramount to remain deeply wary of unsubstantiated rumors, particularly those that aggressively promise instant, overnight wealth. Any decision to adjust holdings, whether to hold steady, convert a portion, or liquidate some assets, must be executed with a clear, rational understanding of the associated risks. Never on the basis of blind or overconfident speculation. As the narrative surrounding Iraq's financial future unfolds, there are concrete, verifiable indicators that observers should watch for as definitive proof that real structural transformation is genuinely in motion. The first is the appearance of official documentation, specifically memoranda of understanding, MOUs, or formalized contracts that explicitly detail cooperation between international banks and Iraqi financial bodies, or demonstrable changes in banking regulation and monetary policy language that specifically reference new foreign exchange protocols. Secondly, look for clear public statements from major banks or the highest Iraqi financial authorities confirming ongoing cooperation and upcoming, detailed reforms. Thirdly, track verifiable movement in foreign exchange markets, including legitimate volume and credible movements in the dinar's value on established trading platforms, distinguishing these from activity on unregulated forums or black market channels. Finally, observe the implementation of regulatory compliance frameworks, enhanced transparency measures, and the international oversight of anti-money laundering (AML) protocols, as these are foundational for global banking acceptance. Conversely, it is equally important to be vigilant against clear red flags that signal potential deception. Sudden, aggressive hype appearing on obscure websites or through unverified social media channels, especially when claiming a guaranteed revaluation by a specific imminent date, is nearly always a signal of a scam. Similarly, promises of fixed, high exchange rates with no credible, official backing from a recognized authority should be treated with extreme caution. Any offer to reserve future conversions or to guarantee privileged exchange rates, unless explicitly backed by verifiable documentation from a major legitimate institution, is highly suspect. The history of currency speculation is unfortunately replete with such schemes, which have consistently led to disappointment and financial loss for unwary investors who prioritized excitement over verifiable fact. Security must remain a primary concern for anyone managing dinar holdings. For those who hold physical notes, ensuring their safe storage and, critically, verifying their authenticity is paramount. This includes checking for correct serial numbers, ensuring the notes are in clean, undamaged condition, and ideally seeking verification from a reliable official authority. For individuals dealing with digital or bank-linked dinar services, securing account credentials, adhering strictly to banking best practices, and avoiding the sharing of any sensitive personal or financial information on unverified online platforms is essential. Given the well-documented history of financial fraud and scams within the broader currency speculation space, heightened security measures at this critical juncture are not just advisable, but absolutely necessary to protect one's assets. Furthermore, this potential institutional shift encourages a long-term strategic perspective. Should a transformation or revaluation occur, or even if the currency simply achieves greater stability, the doors that open could extend far beyond immediate conversion profit. A stable, internationally recognized dinar could unlock significant opportunities for streamlined remittances, legitimate foreign direct investment, expanded trade agreements, and stronger regional currency partnerships. This newfound financial flexibility would be particularly impactful for individuals connected to Iraq through family, business, or the diaspora community. However, realizing this potential requires both strategy and profound patience. Any significant currency reset, if it happens, is likely to unfold over an extended period, potentially many months or even years, because economics is inherently complex and global finance operates at a deliberate pace. Even once reforms are formally initiated, the process is likely to involve multiple, staggered stages: a soft launch, a period of limited convertibility, phased windows for exchange, carefully managed compliance rollouts, and potentially a gradual or staggered revaluation process. This complex rollout means that periods of high volatility, both in the currency's value and in the physical access to the new mechanisms, are probable. Maintaining a clear, patient, and grounded mindset is therefore infinitely more valuable than impulsively chasing every rumor or reacting to calls for quick gains. This is a marathon of institutional and economic change, not a short sprint of speculation. The alleged serious involvement of JP Morgan, if confirmed, is not just a story about one bank. It could act as a powerful catalyst for broader global partnerships. Its participation might motivate other major international banks, institutional investors, and even global bodies to re-examine and re-engage with Iraq's financial future. This domino effect could trigger wider, more comprehensive reforms within the country, potentially leading to significantly improved financial governance, clearer foreign investment regulations, and enhanced economic transparency. For dinar holders, this is crucial, as a stable, diversified Iraqi economy provides the necessary fundamental support for long-term currency stability, ensuring that any gains are not merely the result of a speculative spike, but are backed by real, sustainable economic health. Yet, even with the presence of optimistic signals, it is a reality that few outside of the core financial and governmental circles possess full, complete visibility into the intricate processes currently unfolding behind the scenes. International banking negotiations, meticulous regulatory compliance checks, and the approvals required from global financial bodies are inherently confidential and often silent processes. This lack of transparency underscores the critical importance for anyone interested to maintain a healthy, rational skepticism and consistently demand concrete evidence. When official news is released, it is essential to rigorously vet the source, identify the institutions involved, and seek out any verifiable supporting documentation. Always factor in the possibility of external disruptions, unexpected reversals, or delays caused by unforeseen global events that could fundamentally disrupt even the most established roadmap. For those watching this story unfold, as curious non-investing observers, the fate of the Iraqi dinar remains significant because its trajectory can have wide-ranging ripple effects across regional markets. A stable, internationally accepted dinar influences regional trade flows, alters foreign exchange corridors, and deeply impacts the economic lives of diaspora communities worldwide. Even without a direct financial holding, the overarching themes, stability, global financial integration, and ambitious economic reform, carry broad geopolitical and economic consequences that warrant close attention from any observer of international finance. The success or failure of this potential transformation speaks volumes about the future of emerging markets and the effectiveness of international cooperation. Finally, we must consider the critical factor of timing once more. Even in the highly optimistic scenario where reforms are successfully implemented, global banking networks fully integrate, and public confidence is fully restored, the actual moment of a currency conversion or revaluation may not arrive suddenly. The process could involve carefully managed, phased rollouts, gradual unlocking of capital, or targeted, controlled windows for exchange. This implies a potentially prolonged waiting period, possibly spanning many months or longer, during which volatility could remain high and the path forward may appear unclear. It is precisely during such a period that remaining grounded, resisting the urge to panic, and actively avoiding the emotionally charged pressure from hype-driven voices is most essential. The path to a revaluation, if it materializes, will likely be a testament to deliberate action, not instant gratification. For those who lean toward skepticism, this perspective is entirely warranted and, in fact, necessary. Healthy, critical doubt is a vital protective mechanism. The long and often troubled history of currency speculation is unfortunately filled with stories of broken promises, aggressive scams, and expectations that were massively inflated beyond reality. Many have suffered financial losses because they chose to believe unsubstantiated rumors over verifiable facts. A cautious and skeptical approach can effectively protect against making impulsive decisions or being unduly swayed by the volatile forces of fear or avarice. The wisest, most sustainable stance right now is likely the measured combination of determined optimism regarding the potential institutional shift, tempered by a powerful commitment to caution and evidence-based analysis. As we bring this comprehensive update to a close, the narrative surrounding the Iraqi dinar transcends mere short-term profit potential. It is fundamentally about deep, foundational economic transformation, global financial reintegration, and the establishment of powerful institutional legitimacy. If these complex reforms ultimately succeed, the benefits for Iraq's financial infrastructure, trade potential, and the trust in its monetary system could yield rewards that extend far beyond the speculative gains sought by a single group of currency holders. That said, it must be reiterated that this scenario remains one characterized by high stakes and inherent uncertainty, with a multitude of interconnected moving parts and many critical unknowns still unresolved. While the potential strategic involvement of J.P. Morgan is undoubtedly a powerful and compelling signal, it is not, and should not be mistaken for, an absolute guarantee of a specific outcome. Anyone who attempts to frame this development otherwise is likely relying on promotional hype rather than on verifiable financial facts. The most intelligent and secure approach, whether you are a dedicated long-time holder, a curious potential investor, or simply a neutral observer tracking international finance, is to remain hyper-alert, thoroughly informed, and resolutely patient. This breakdown details precisely why the strategic interest of a major global bank in Iraq's currency system represents a possible inflection point, what its involvement could fundamentally signify, and, crucially, what it definitively does not guarantee until formal official word is publicly issued. No matter your position, this is a developing story that demands close and constant monitoring. Stay calm, stay secure, and remain ready for whatever definitive announcements may come next. For many, this could truly be a new beginning, but patience and clarity will always be the most valuable assets.